Dear students, let us do a new module. The module is titled Definition and some important concepts about salary. You know that salary is one head of income and the concepts should be clear if you want to do the problems correctly. So that is the importance of this module. It's a module more or less theoretical, but whatever concepts I will explain, it will be helpful for the computing salary income. So first is definition of the head salary. Salary is defined under section 15 of the Income Tax Act. So three incomes are taxed under salary. One is any salary due from an employer or former employer to an assessee in the previous year, whether paid or not. See, for example, you are working in an organization, every month you are getting the salary. It is paid to the employee. So it is taxable. Imagine the company is going at a loss, they have not paid the salary. They are going to get it later time also. So due on receipt basis, salary is taxable. We have learned the features of income. So here you have to remember, so if it's due to you also, you are supposed to pay the tax. Whether you have not received, even if you have not received also, you are supposed to pay the tax. So it will be included as salary income. Second is any salary paid or allowed to him in the previous year by or on behalf of an employer or former employer, though not due or before it becomes due to him. Paid or allowed to him. See, imagine the salary is allowed to him, or if it is paid, then also it will be taxable. Always you have to remember, income is taxed on due or receipt basis. Third is any arrears of salary received. See, especially in the case of government employees, whenever they will revise the pay scale, they will pay the arrears of salary. So you have to remember, arrears of salary if you are receiving in the previous year, that also will be taxable. So three incomes are taxable under the head salary as per section 15. Now features of salary, so many points are there. Employer-employer relationship. Salary includes monetary and non-monetary benefits. Actual or receipt basis, whichever is earlier. Past, present and prospective employers. Exemptions and deductions. Tax deducted at source or TDS. Salary from multiple sources, perquisites, place of accrual of salary income, exclusions for not having employer-employee relationship. Now, I have listed the features of salary. Then, now I am going to explain. So, first point is salary on due or receipt basis. First point is due or receipt basis. Due or receipt basis. Salary paid in India either on the last day of the month or on the first day of the next month. See, for example, if you are working August 2025, either you will get salary on August 31st or you will get on September 1st. If salary falls due on the 1st of April and last salary on March 1st, that meaning 1st of month its salary is paid, then salary from March 25 to February 28 shall be considered for the assessment year 25-26. That meaning March salary you will get on April 1st. April, May, June, July, August, September, October, November, December, January, February. So if it's paid on 1st of every month. If salary falls due on the last day of the month, salary from April 25 to March 26 will be considered. That meaning April you will get one salary. April, May, June, July, August, September, October, November, December, January, February, March. So that difference you have to remember. Now, if salary due or receipt falls in the same previous year, if it's coming in the same previous year, there will be no problem as it is in the same previous year. But if salary falls in two different previous years, then salary becomes taxable in the year in which it comes earlier. For example, if salary falls due on the previous year 23-24, but actually received in 24-25. See, 23-24 it is due. 23-24 it is due, but 24-25 you are getting it. That meaning it will be taxable in the year when it comes earlier. That meaning earlier year 23-24 it will be taxed. Second point, if salary falls due in the previous year 23-24 but received in 24-25, it will be treated as the salary of the previous year 23-24 as it falls due. That is what I explained. Actually due in 23-24 but paid in 24-25. So whichever comes first, so it will be taxed in 23-24. Now, if salary falls in two different previous years, if advance salary received in 23-24, I told you the advance salary is a concept some organizations are giving when you are in hospital, when death in the family or anything like that, any emergency, employees will ask for advance salary, 2-3 months advance salary from the employer. That is the concept of advance salary. So if advance salary is received in 23-24 for the previous year 24-25 but taxed in the previous year 23-24 because it's received in the previous year 24-25. So here also you have to remember whichever comes first, it will be taxed. You are getting advance salary for 24-25 and 23-24. So it will be taxed in 23-24 itself. This is applicable irrespective of the method of accounting adopted by the employer. You have to remember one thing, whichever comes first, that will be taxed. Whenever you are receiving it, whether it's actual salary or advance salary. First problem we will do. Mr. V joined for job on July 15, 2024 on a monthly salary of rupees 40,000. So you have to remember he will get only half month salary for July, including allowances. Find out his taxable salary if he receives salary on the last day of the month and on the first day of the next month. Last day of the month meaning it's July 31st. So here you have to remember, we will calculate taxable salary of Mr. V for the assessment year 25-26 if salary falls due on the last day of the month. So salary for July it's only half the salary. So July half salary will be paid on July 31st. You will get 20,000. 20,000. Next salary for August, September, October, November, December, January, February, March. 8 months. 8 months, August to March. 8 months, 8 into 40,000. 3,20,000. So total taxable salary will be 3,40,000. 3,40,000. Now if you take the next concept, if salary is paid on 1st of next month, so 15 days salary for July is paid on August 1st. So July salary paid on August 1st, 20,000. Now August salary is paid on September. So September, October, November, December, January, February, March. 7 months salary. 7 months salary, 7 into 40,000. So it is 2,80,000. So taxable salary will be 3 lakhs. You can see the difference. This is an important concept when you do the problems in computation. So we have to take the salary whether it's paid on last day of the month or first of next month. Now pay scale is an important concept. Pay scale is a structured range of salaries for a particular job or group of jobs. That is the definition. It usually has a minimum pay, maximum pay and increment. Say for example, it is given like this. Pay scale meaning whenever you join for a job, you get an appointment order. Say for example, if it's 30,000, 1,000, 1,000, 40,000. This is the pay scale. Now what does it mean? You start with the salary. If you are joining on January 1st, then your starting salary for the calendar year will be 30,000. Next year it will become 31,000. Next year, next January it will become 32,000. Like that till you reach 40,000. Then once you reach 40,000, they will give the next pay scale. This is also important in salary computation. Now salary grade or pay grade. A salary grade is also called a pay grade, is a classification level assigned to jobs based on their responsibilities, skills required and qualifications. Each grade corresponds to a particular pay scale. Say for example, in a university, assistant professors are there. Assistant professor, associate professor and professor. Assistant professor will be getting a low grade pay. Say for example, if it's 5,000. Associate will be getting 10,000, whereas professor may be getting 20,000 or 15,000. Just an example, that meaning if you want to know a person whether he is assistant professor or associate professor, you can just ask him whether what is your pay grade. That meaning if he says that pay grade is 5,000, that means he is assistant. If it's 10,000, he is associate professor. If it is 20,000, he is professor. So that pay grade meaning it will reflect the position he is holding or his level of responsibility. So this will be added to the gross salary. So that is the pay grade. Now one more problem we will do. One more problem. Mr. A joined for job on 1st September 2020 in the grade of 12,500 and 20,000. Find out his salary for the previous year 24-25. 1st September he has joined. So you have to remember date of increment is 1st September every year. So 1/9 he joined in 2020. 1/9/22, 31/8/21. Salary will be 12,000. 1/9/21 to 31/8/22. Salary will be 12,500. 1/9/22 to 31/8/23. Salary is 13,000. 1/9/23 to 31/8/24 is 13,500. Now 1/9/24 to 31/8/25 salary is 14,000. Now your previous year is 1/4/24 to 31/3/25. Now this is the question. What is the salary? Now April 1st 24 to March 31st. This is your previous year. Now salary from 1/4/24 to 1/4/22 to 31/8/24. So this is 13,500. So 13,500 into how many months? September, October, November, December. So 1/4/24 to 31/8/24. 5 months. That is into 5, 67,500. September, October, November, December. Now salary from 1/9/24 to 31. 1/9/24 to into 7 months. That is 98,000. 98,000. This is from 1/9/24 to 31/3/25. So here 1/9/24 to 31/3/25, 14,000. So that meaning September, October, November, December, January, February, March. 7 months. This is from April, May, June, July, August, September. So that is 5 months. That is how you are getting, and the total salary will be 1,65,500. 1,65,500. This is these two values we have to take, but we have to do this calculation to get the value. Now salary income computation, one chart. Just this will explain how we can calculate the salary. See, computation of salary includes 4 components. 1, 2, 3, 4. So first is salary. This is salary is included. Salary components are included. Allowances are included. Allowances plus perquisites. We write as perks. Plus perquisites plus profit in lieu of salary. Profit in lieu of salary. Profit in lieu of salary. Now 3 deductions are there from this value what we compute. That is standard deduction, professional, tax on employment, entertainment allowance, and tax on employment. These 3 deductions. This is the structure. When I explain this, you will not be able to understand the values also. We are going to see that in detail in the coming modules. So salary income is salary plus allowances plus perks plus profit in lieu of salary. Now 3 deductions are allowed. One is standard deduction, entertainment allowance, and tax on employment. This is how we will calculate the salary income. So this is what I wanted to explain in this module. Happy learning. Thank you.